Hello, everyone. Can you hear me?
Yep.
Oh, any news, anyone? Anything you would like to share?
Hello.
Nope. Okay. I guess you just want me to get started. Uh, Welcome back, everyone. Uh, we have got exam two. The highest score was about 137. And so that is indicating that overall score has gone down in exam two compared to exam one. And when I was looking at the homework, many of the homework assignments on activity-based costing were not done or not attempted. So that might have had an impact on the scores as well. I really urge you to not delay doing the work. Now, the one thing that I can tell you is that if you look at my, can you see the screen right now?
Yes.
You've got about 4 and 5, 9, about 27 points of extra credit points available over here. Don't miss them. And at some point of time, when you are done with this, if you want me to open up the extra credit practice exam too, I will open it up from tomorrow or day after.
The dashboard activities and Excel simulation questions already closed. They closed on the 1st of April.
Okay, I can open it up for you if you have not done it. If you have done it, that's great. Today is 13th. I'll give you another week to finish it. So it's not due on 420. If you have not done it, you can still get about 27 more points.
Thank you.
And then what I'm going to do is in about a couple of days, I'll open up the extra credit practice 2 for another 12 points. So you'll have about 30 points odd to if you have not attempted it. So I'll open this up until again 420, or just say someone send me an email on that. I'll do that tomorrow. Okay. Uh, so make sure to do it. Now, when we were before the exam, before the exam, we were on chapter 22, and I had to do one portion on chapter 22 related to the balanced scorecard. I'll cover that today. And then I'll get into chapter 23, that is relevant costing for managerial decision. Today I'll go over the concepts that you need to understand for this chapter. Most of chapter 23, you already know the information from the previous chapters. So there are just a couple of new concepts. This is just application based chapter, which will use your knowledge of variable cost, fixed cost, contribution margin, etc. from the previous chapter. It's just that you'll be presented more than one alternative to make a decision. Whenever you make a decision, you make a choice between one versus the other. So all these problems will present you with alternatives, and you just need to choose the better alternative based upon the cost. There are other considerations, non-economic considerations, which are there. However, for our purposes, this is all you need to do. And I will, when I come to that chapter, then I'll give you the introduction, etc., for that chapter as well. As far as the performance measurement chapter is concerned, you have done the ROI, RI, you have made the segment statement, etc. You have done all those stuff already. We have already covered that. And today we will wrap up this chapter, and it'll take me another 15 to 20 minutes, probably at the most, to wrap up this chapter. And then I'll move on to chapter 23. That is your last chapter. It will take me another 2 class periods for chapter 23, various kinds of decisions. I will probably send you another handout through the D2L or through email for chapter 23. And we will be doing basically that handout, those one handout that I send you on chapter 23 in the on Tuesday most likely. So today is Tuesday, right? So Thursday, sorry. So after that, uh, we have got today is 13th, so our next class is on 15th. By 22nd, I should be done with this chapter. Then we'll have one day for review. Uh, if you need any extra time, we can talk about that for 27th. Otherwise, I'll try to create a third practice exam for the remaining chapters and open it up after 22nd, so that you can do it before 27th or 29th, and then we can do a review on 29th, something like that, depending upon how we move, if there are any more questions, if there are many more questions or not, but depends upon all those things. Okay, are we good? Do we understand each other? Any other concerns or questions? Okay.
Aren't we on chapter 23?
I opened the wrong slide, I guess. No, I was planning to open 22. I ended up opening 24 for some reason. We are not doing capital budgeting. It used to become too much, and then most of the capital budgeting was also taught in the finance class, so I kind of dropped it here because it becomes quite a repetition in the finance classes that you will take. Means I have the time. If you want, I can cover that also. Your choice. Now we were doing the performance measurement basically. So we had gone over expense allocation, departmental income statement, ROI, RI. This was the last thing that was left on it. Now you should be able to see on my screen, analyze investment centers using balance scorecard. Is everyone there? Does everyone see that, please?
Yes.
And you can all hear me.
Yes.
Okay. And again, please point it out. If you see something which is not correlating with what I'm speaking, please do point it out because I probably need something where I can see myself also. Maybe I should log in through my cell phone also. Uh, it's not a bad idea actually. I have got a laptop where I can log in. Anyway, it's just easier to ask you guys. Anyway, so what until now what we did was we tried to analyze the performance of a profit center, investment center using ROI, that is return on investment. How much money are we going to make, or the residual income? Those are basically financial measures. In addition to the financial measures, there are non-financial measures as well for the evaluating the performance of the investment center. So, for example, if you go through, if you take a flight, and if you understand that you didn't have a good experience or you had a good experience, right? So those are factors that play into your buying uh, the airline ticket next time. If you had a terrible experience, you'll probably shy away from that airline unless and until they drop the price very significantly. Uh, so, so there are other factors besides the financial factors that do play into the consideration. So, one of the common things that has been used is a balanced scorecard. Uh, and I saw an example of it when went for the vaccination shot at Forbes Hospital. They do use the balanced scorecard approach for the for evaluating the performance. I might be able to. I should have done that earlier. But if you go to their cafeteria, they've got their balance scorecard results posted over there, and it was kind of interesting. So I took the pictures from there to make it as an example. Maybe I should invite someone from there to. Yeah, that's a good idea. Uh, Means I was surprised, but I like that idea. Anyway, I'll whenever I'm able to find it, I'll try to share it with you guys, an actual example. Uh, but if you go by any chance, if you happen to go for your vaccination to the Forbes hospital over here, then you can have a look at it as well. So just an interesting piece of information. I know I'm still trying to find it. Something gets into my head, then it gets into my head. Okay. I should be able to show you through my Google account, I guess. So, what is the balance scorecard? What it does is it collects information on several key performance indicators within each of the four perspectives. What are these four perspectives? One is obviously financial, you already know about it. The one is customer satisfaction that I was talking to you about, that you need to have that customer satisfaction. Uh, for example, that might be number of new how can you measure customer satisfaction? Maybe by the number of new customers acquired in every time period, or percentage of on-time deliveries, or percentage of on-time flights to their destination, and so on, or time to fill the orders. If you go to the pharmacy, if your order is not ready, then it's a problem. Means you get irritated a little bit. So all those indicators are important and they are measured by the company for internal evaluation as well. Next is internal processes. So internal processes relate to uh, can we improve these processes so that our defect rates is less. Right now, uh, there it's kind of again. Please understand, this is not a political statement. Uh, I'm just going to give you an example. Recently in the news was AstraZeneca, no, sorry, Johnson and Johnson vaccine was they stopped using Johnson and Johnson vaccine. CDC, FDA said to hold the vaccine because there were four defects, four clotting cases per million. That is better than Six Sigma. It is better than any defects per million that you can find. However, it is being projected all over as like uh, a very bad thing. It is saving more lives. With the COVID, the infection is at 16.5%. Deaths are at 16.5. There were about 16,500 deaths per million compared to 4 deaths per million. Uh, every year, there are about 1,250 deaths per million in just in accidents. What I'm trying to give you is a perspective. When you read these news items, you need to make sure that you understand what's happening. You need to have the information. I'm not saying it's not a bad thing, but it's means you do hope that your medical services are 100%, but they're not. And so that's how your defect rate means. It is how many defective parts have you produced per million. The gold standard is Six Sigma, that is six defective parts per million. That's the standard which every company tries to achieve. Cycle time is basically the time, that is the processing time, actual processing time. So you try to eliminate the non-value added time. For example, you're storing time, you're moving the material time, etc. So you try to organize the processes in such a way that your overall time is more productive than non-productive, and so on. Labor hours per order. So basically, whatever helps you to improve the internal processes, and how can you measure them? That's what this is about. The next is the innovation or learning. For example, recently from last 2 years, uh, you see a new mode of teaching. Means I have not done this before. You have not experienced it before. So there is a learning process. I went through about 4 or 5 long 3 to 4 days classes to be able to do everything I want to do, I can do through for teaching. So uh, there is a learning process. So it relates to employee turnover. Or if your employee turnover is very high, that means there is something wrong, maybe in terms of safety and so on. Means I I just heard a news recently that uh, it's probably a fake news, but I heard that Amazon, some people are criticizing Amazon that they make their workers work so hard that they have to pee in the bottles. I don't believe it, but there is a news item over there. That would be shown in their in employee turnover if they do that. So you can look at the numbers, see if the employee turnover is very high. Then there is some issue that relates to something on the floor. Number of new products that have been made, number of new patterns that have been um, applied for. That also shows how much money was spent on research. Like for example, uh, you may think I'm not trying to be proponent for anyone here. I'm just giving you examples. So it's just please take them as an examples only. Uh, uh, right now, uh, when we started to talk about the booster dose for Johnson and Johnson vaccination, there is a lot of criticism that is coming in the news that this is just for making money. Yes, the businesses are there to make money. They are not there for charitable purposes. Yes, that's true. But you have to understand that they spent a lot of money on research. They spent billions and billions of dollars to get the drug to that place. If you spend billions of dollars, you need to recover that money. Otherwise, the company will go under. And next time when there is a pandemic, there will be no one who would like to do the research. We all want the results, but we don't think about the research that goes behind it. So, yes, they means there's undoubtedly they are there to make money. There's you know it, I know it. They are a business people. When I go and teach at IUP, I'm there for the money. That's one of the reasons, right? I'm there to help my students, yes. But suppose they stop my paycheck, then what do I do? Right? So I cannot ignore that part. You cannot ignore the money in the equation. Don't consider money as a bad thing. If you don't have the money to charge your cell phone or pay for your cell phone bill, think about it. You need the money, right? If you order food from Panera or other place, you basically, it's not that you go and just ask that, oh, I don't have the money, can you give me the food? I ordered it, but I don't have the money. Now what? So it's not a bad thing. So they do spend billions of dollars in research, and that is one of the parameters for the innovation part. That will lead to new patents and new products. And then you still, if there are new products, you need to train people over that product. And then hopefully it will lead to employee satisfaction or reduced employee turnover. And then the financial part, you already know: sales growth, ROI, net income, and so on. So all those four perspectives are important. I'm going to stop sharing the screen for a minute. I need to pull up something else. I'm here, I'm not gone anywhere. Okay. I'm going to share the screen with you. Let me know if you can see it. Do you see it?
Yeah, we can see it.
Yes.
It's not a good picture, but I just probably can give you the idea. For example, this is from their notice board in cafeteria. So for example, this is again not related to the monetary goal. So their goal number one is to decrease the workplace violence. You won't believe that patients become violent many times. And my wife faces that every often, means many times, because they're frustrated, no one is there with them. And goal two is decrease fall with injury, because many times patients cannot get up. When they get up and they think that your mind is working in a certain way, but your body is not in tune with your mind. So these are their two numbers, there are two goals relating to safety. So they basically keep track of that over a period of time. So January, I guess they had a lot more issues. They had 6 issues, and then they had 2 falls over there. And they got it down to 1, and hopefully they'll get it down to 0. So that's how the balance scorecard can work. Uh, so, so we have got uh, for the safety measures, process measures they are taking is that they will give the CPI training for staff. Fall risk intervention will be in, means intervention will be in place, and so on. So basically, what I'm trying to show you is uh, this is not the, so they do keep track of uh, the CPI training for the staff for the then for the fall risk intervention in place. So they, if when they put it, how does the patient fall rate changes or not? So they're keeping track of it not only through the. So what I was trying to show you is an actual example of a balanced scorecard. That's all I was trying to show you. So it's not that it is not used; it is used by most of the major companies around. So top three problems of quality. They had an in, hospital had an increase in COTI occurrences. I don't know what that means. The hospital missed the target for mortality related to CPIS, sepsis. Target missed for 100% hand hygiene compliance. So here are the root causes of it. Here are the countermeasures for it. Okay. So you, this is not means this is just an example. I got the picture for. So goal one, increase SCP core measure compliance is goal one, decrease COTI occurrences, improve hygiene. So everything is related, whatever based upon the goal, you've got the measures, you've got the countermeasures, and then you track it. It's like you study, you do the homework, you do the quizzes, then you take the exam. That's how we measure it, whether you learn something or not. Is it the perfect measure? No. So here were the main goal: efficiency to eliminate waste and deliver the highest quality of care. So this was at the highest level, efficiency. Then patient experience was the next one. So relating to the customer satisfaction. Another goal, human development, that it relates to the, you see what I'm saying? Here is the total board: operational excellence, balance scorecard, safety, quality, patient's experience, efficiency, human development. With safety, they have got these goals and countermeasures. With quality, they have got this, and so on. That's their total balance scorecard. I should have started with that actually, but I was still trying to find the example. Thanks to Google, I was able to find it. Yeah, that's my vaccination card, I guess. Well, that's my wife. Anyway, so you get the idea, right? And then they'll basically keep track of each one of them. So it does make a difference, and it is there. So that's about it for this chapter. As I told you, that's about one thing that's left. Okay. Now I'm going to start on the last chapter for the course. What can you see at this time?
The screen with the list of all the PowerPoint presentation links.
Okay, got it. Do you all see an Excel file?
Yes.
Okay. So in this chapter, I need you to first, I will first explain you the concept of relevant cost. I don't know whether I gave this example earlier or not, but I'm going to give it to you again. If I've already given it, please just stop me, then I can move on to the next example. So you've got two gas stations, say next to, opposite to each other or next to each other, however you want to. One is say Get Go, and the other one is Sheets. Hey, they just opened one more Get Go at on our close to our home, on William Penn Highway. I don't know how many Get Go's and how many gas stations are there in a 5 mile. There should be at least 8 to 10 gas stations in 5 miles. They're selling there. I think they make more money on the food than on gas. Anyway, that's besides the point. So one gas station is selling the gas at say $2.75 a gallon, and same gas is being sold at another gas station at say $2.95 a gallon, approximately 87 octane. Everything else is same at both the gas stations. So we are assuming everything else is same. There is no other difference. Where would you generally go?
Get Go, the
Get
cheaper
Go.
one,
Get Go. Why?
because it's cheaper.
What made the difference in your decision? You're right, Kate, but what really made the difference in your decision?
Would it be the cost?
Yeah, what part of the cost made the difference in your decision?
One cost is higher than the other.
By how much?
20 cents.
20 cents, right? So your differential cost between the two alternatives is 20 cents, right? So what made the difference in your decision is that 20 cents, 275 or 295? What made the difference in your decision?
The 20 cents would make the.
So 20 cents made the difference in your decision, right? So this is basically the relevant cost. You'll be paying 275 either way. So this 275 is really not relevant. You'll be incurring it at any place, right? There is no difference in that 275 part. The difference is in 20 cents. So if there are two alternatives, and The difference between those is basically what we call as a differential cost or relevant cost. Any questions on that part, please? Yes, please. Any questions on that part, please? No?
No.
Okay. So let's assume that 3 years ago, you had bought a PC for about $4,000. A new PC, which is more powerful than what you bought 4 years ago, you can buy it for $1,000. Now, in a decision to buy or not to buy the new PC, is this 4,000 relevant?
No.
It's not relevant. Why?
You already paid for that?
You already paid for that. What do we call it in accounting? Sunk cost, right? You already paid for it. It is not going to, whether you buy it or do not buy the PC, that 4,000 will still remain there as your cost. There is no difference in that cost. Does everyone understand it? So whether you buy it, you still have that $4,000. If you do not buy it, you still have that $4,000. There is no difference between the two costs. But if you buy the new PC, you'll have an additional cost of 1,000. If you do not buy it, it will be zero, right? So the differential cost here is the difference between the two alternatives, and your that's the differential cost, which is relevant to your decision. Okay. Now, similarly, when we talked about the fixed costs, there are something called the direct fixed costs, like we had seen earlier, and then indirect fixed costs, which will be allocated fixed cost from or overhead, basically cost allocated from other departments. Now in the direct fixed costs, for example, you've got product line one and you've got a production manager for product line one that is being paid, say, $70,000 per year. If I close this production line one, I don't have this cost. Right? So that's a direct fixed cost. So if I close it versus I do not close it, there is a difference. So that cost is relevant or not relevant between, if you have to decide between closing and not closing production line 1.
It's relevant.
It's relevant because it is different between the two alternatives. Now, if you were paying insurance for the factory where all these products are made for say $5,000 a month, and if you close that production line 1, would would this insurance cost still stay or go away?
It would stay the same.
It would stay the same whether you drop the product line or do not drop the product line. So this is relevant or not relevant?
Not relevant.
Not relevant because it is not changing between the two alternatives. Okay, questions? Is everyone good with that, please?
Yes.
Yes.
Okay, so that's the basic or very simple concept that you need to understand for this chapter. And if you have understood it, we are just going to use the application of this chapter or this concept for various problems. The rest of the knowledge you already have for this chapter. So as far as the concepts are concerned, there is nothing much. There will be probably one more concept at the end of on Thursday, but that's about it. So the various decisions we'll be making is to buy or to make, or basically to buy or to basically to outsource or not to outsource, to drop a product line or not to drop. And so we'll be looking at various decisions in this chapter one at a time. So first decision is, you should be able to see a problem now on my screen. It says make or buy. Do you see that?
Yes, we see that.
Okay. So the first problem here is whether to make a product or buy the product. So here are the various costs where it incurs $9 per unit for product A, which it currently manufactures and sells for $13.50. They can purchase this unit for $8. So the question is, should they still manufacture it, or should they buy it for 8 and sell it for 11.40? If it does so, unit sales would remain unchanged, and $8 and $8 of the 9 per unit cost of product A would be eliminated. Okay. So if you make the product, your selling price is $13.50, you're buying, and you're selling at $11.40 if you buy it. Cost to make it is $9. Cost per unit to buy is $8. And notice that if it does so, unit sales would remain unchanged and 8 of the $9 cost would be eliminated. So basically $1 will not be eliminated. So though that's the like kind of a cost that will not go away. So this $1 would stay whether you make it or whether if you basically $1 will stay even if you buy it out of this 9. Another way to look at it is, if you make it, you'll be incurring $9. If you buy it out of this $9, you'll be incurring $1 only. So that's what that $1 difference is due to. So in this case, you'll be income per unit is 240 and income per unit here is 450. This is actually not such a good example, in my opinion, because they could as well increase the price to 1350. Hopefully there'll be a better example which shows the difference, but that's what the concept is. So
I had a question on this.
yeah,
So is your answer dependent just on which income per unit is higher?
yeah, that is the objective.
Okay.
I really don't like the way this question has been written. Let me give you one more explanation on this. So the cost to make it is $9, right? So So this $1 will only remain if you buy it, basically. Okay, not when you make it. That's why $1 will not be eliminated. Okay, everyone. Next, I'll come to this later. Okay. Come to whether you can eliminate a segment or not. A division of a large company reports information shown variable cost and direct fixed cost are avoidable. So basically, these are avoidable. I told you, I gave you an example earlier. Avoidable means basically they'll be eliminated if that particular segment is eliminated. 45% of the indirect fixed costs are avoidable. So 55% is not avoidable, right? So the part that is not avoidable, is that relevant or not relevant?
Not relevant.
It's not relevant because it's not avoidable. It will be there either in both the alternatives. Okay. Does everyone understand that part, please?
Yes.
Okay. So sales, your variable cost, fixed cost. So direct fixed costs are 31,000 and your indirect are 55,000, out of which 45% is avoidable. So they will go away. So that is relevant, but 55% of that is unavoidable. So as far as the variable cost is concerned, that's avoidable. Direct fixed cost of 31,000 is avoidable, and indirect expense of 45% is avoidable. So total avoidable is 210,750. So revenues, if you're so you have got 260,000, avoidable expenses are 210,000. So you are still making 49,250 with this segment, or you will lose 49,250 if you close this segment, because after covering the variable cost and direct fixed cost, basically your profit will contribute to the remaining indirect fixed cost. So if you close this segment, your loss will increase to 49,250. So based on this information, the division should not be eliminated. Any questions here, please?
Nope.
Okay. To keep a product, no, this will be another decision. Okay, let's do a special offer. To accept a special offer or not. Radar company sells bikes for $540 each. They sell 4450 bikes and they can make 4760 bikes per year. 225 to make, 195 in variable cost, and $30 of the fixed cost per bike. In most of these problems, you will see basically the avoidable fixed cost and the unavoidable fixed cost will play a major role. They received an offer who wants to buy 310 bikes for 530 each. Incremental fixed cost will be 44,000. No other cost will change if this order is accepted. So we have got two situations: to accept the offer or not to accept the offer at 530. So out of this, your 195 remains same, and you've got a contribution margin of 335, obviously. This is not changing. So that is not relevant to the decision. And the other cost that is changing is an increase of 44,000. So after taking into account the extra 44,000, you've got an incremental revenue of 59,850. So you can accept the offer. Questions? This has nothing to do with it except that it's just the pricing of the product that we are selling it at a profit. So each snowboard requires 114 of direct material, 44 of variable overhead, direct labor, and 59 of variable overhead. So we know that these costs will be incurred: 114, 44, and 59. For 11,400 units, we just multiplied it by 11,400 units, that's all. Your fixed overheads are expected to be 663,000, fixed selling at 135. What will be the selling price per unit if they want to use a 10% markup? So you added all the cost, you basically added the markup of 10%. So your new selling price is at 315.70. Are we good here?
Yep.
Same thing. Okay, I want you to do this on your own. Make or buy. Number 10, exercise 23-2. Please do it on your own. Okay, has everyone got it?
Yes.
For the numbers I have, the decision was to buy. Here is the explanation for the numbers I have. So I'm assuming you got it, all of you. Yes, Nicholas, question?
No, I got it.
Okay, good, very good. So once you understand this basic concept, it would basically take care of these kind of problems. I will start with a new concept in the next time, because for now it seems like I'll need to start another concept. So I will just do it on Thursday. Okay? Because I have about only 5 or 7 minutes, I can go over it if you want, but I'm comfortable at where we are right now. So hopefully in the next class, I'll go over another two or three concepts, and then it should be done. Okay. See you soon on Thursday.
Thank you. Have a nice day.
Hi, Nicholas. David, do you have any questions? Brooke, any questions? I guess they left. Brooke? Brooke, do you have any questions for me? I think she's not there.
No, I don't think she is either.
What I'm going to do is, because I don't want the whole thing to be recorded, I will stop the class, you will log back in.
Okay, sounds good.
Just log back in again.
Okay.